Give me just a second to get everything pulled up and we'll dive in. Let me tweak my mic gain a little bit real quick. That way I'm a little bit louder for y'all too. Just a second. Alright, is that a little bit better? That made no difference. Hold on. I see. How about now? That really didn't make that much of a difference either, I don't think, but we'll go with it. All right. Let's see. So I'll go with the list. Let me pull up the list real quick. Well, we can start with Tesla because I know several people were asking about Tesla. So, yet again, selling covered calls has been fantastic on Tesla. So let me jump over here real quick and click this because it's getting in the way. Make sure I cover it fully. All right. So Tesla, same thing. I'm gonna start high level and then we'll zoom in. For those that are kind of watching to learn and wrap your head around that, analyzer. I'll do coin and MicroStrategy as well. I'll go through several of the crypto stocks and cryptos. But looking here at Tesla, right? So I'm gonna start high level, and for those that are watching to learn a bit more about maybe how to look at different charts and things, I'm gonna start here. And to make it even cleaner so that people aren't confused, I'm gonna zoom out. If the audio does anything weird, y'all tell me in either of the lounges, just because I changed those mic settings and I don't know if it's going to play nice or not. So if something does get wacky, just tell me. Or if I seem like I'm yelling or cutting out or something, tell me. We'll address it. So, yep. Sorry, adding those to the list so that I've got them on the list. I don't want to forget. So looking at Tesla here, right? Let's dive in and do some actual charts. Same thing as what I've been talking about, warning on. So if we're starting at the monthly, right? From a monthly standpoint, Tesla is still in a downtrend. You've got this high here, this low here, lower high, attempting at a higher low, right? But we've now formed yet another lower high on the monthly chart. So as of right now on the monthly, this is still technically a downtrend, which could follow right here with a lower low, but we don't know how this is going to shake out. If I look at the weekly, and this will start to make more sense when I show the levels of support and resistance here in a minute when I turn them back on. Same thing going on here on the weekly, right? You've got that high from 2021, all-time highs, which were down a little bit over 40% from the all-time high right now. I know I've warned or explained quite a few people why that's risky ultimately whenever you're short term and you keep on buying the dip. Like, y'all know I'm long term on Tesla shares, but I sell covered calls. I need to actually look and see what my current position looks like on those. I was going to buy to close them earlier today, and I ended up holding off because we were below the range where I like to actually sell them and then buy to close. So we actually closed below 250, which makes it seem like Tesla's probably going to see more downside from here. But yeah, sorry, I was checking real quick to see how much the covered calls are that we alerted, because I know several people are long on Tesla shares, so I've been helping people to understand how we can better hedge those positions longer term so that you can, for one, add to your shareholdings with those gains from the covered calls, but also it's not so painful in the pullbacks, and instead you actually come to actually enjoy the pullbacks on stocks like Tesla even when you're actually holding shares. So it looks like as of today we were selling the 240 December 20th covered calls, which tagged they tagged around 2238 today, and we sold them between 2800 and 3800. So as of right now on those, we're up a good bit, at least 30% depending on where you sold them. Same thing, we sold a few of the 250 covered calls as well for December, just because the range we're in, we typically don't stay up in that range for longer than 2 or 3 weeks, which again, this will make a little bit more sense when I turn on the chart drawings here in a second so you can see that. But I just wanted to talk through it from this standpoint as well, so that people can have a bit of an understanding on the fact that you can actually be bullish on a stock and still very much expect downside to come in the near-term future. So as of right now, those 7 covered calls I sold, I'm up like $6,800. So that is another big chunk of Tesla shares, right? So same thing, you can do it with NVDA, but let's stick with Tesla for a second and kind of walk through this. So turn drawings back on real quick, and apologies, this is busy and messy looking a little bit, but that's because we're trading multiple time horizons as well as keeping up with different time frames for levels of confluence. So as of right now, you can see here the orange ranges, right? Which is the same thing I shared with you guys back here. Those are the ranges I like to sell covered calls in. So normally I sell it up towards the top, and then I'll buy them to close them down at the bottom. The reason I didn't do that, and I'll talk about the actual technicals here in a second, but the reason I didn't do it is because we closed actually below the range. And that 250 point is a key point for Tesla. You can see typically when Tesla rejects back under 250, it gets painful, and that's okay. I mean, like, I sure would have loved for it to keep on rocketing up past 300, but we're not out of the downtrend until we have a solidified close above the 300 level. So if we're looking at the weekly, you can see that as of right here, we're still in downtrend. We still have lower highs going on. It's not actually showing a momentum push here to the upside. I know we had that big huge gap up off earnings, but really that was a great opportunity for people that are long. That's where you need to be selling covered calls to hedge yourself. We left this massive gap on the daily with that gap up from earnings all the way down at 218.72. So the thing with gaps is they tend to like to get filled. I don't know the exact percentage of how often they get filled. I can tell you that every single Tesla gap from this range up here down to that 101 range has been filled over the last 2 or 3 years. How quickly a gap gets filled is kind of the question. The only gap that's lingering at this point is, you can see this one right here. And I know it's lingering, and this is why I leave all my different colors, right? Because it's a dotted purple line. So I'll leave dotted purple lines as a gap once it's formed. You can see there's actually one here. If I move this, you can see it a little bit right there. And then once the gap fills, I mark it as solid purple, because those levels end up serving as levels typically of support and resistance, which you can kind of see here where that gap filled. You can see it serving as support and resistance again. Same thing going on right here, where that gap from previous ended up serving as a resistance and rejection point. So that's why it's important to leave those on the chart and kind of use different legends for your colors and your time frames. But ultimately, Tesla is in a odd place here. A lot of the stuff from earnings was great, and I love it from a long-term bullish standpoint. But that being said, a lot of the hype factor components that came with Tesla earnings are things that really aren't going to contribute to the bottom line and the revenue until at least 2026. So you've got that combined with all the current kind of tech as a whole this week pulled back quite a bit. I think some of that's the election uncertainty, but ultimately right here, I know some people are going to look at this and be like, that's a bull flag. And while it technically is, you want to be careful for the same reason that this bull flag got painful for people and this bull flag got painful for people and so on and so forth, right? So be careful here, especially with the larger time frames looking like it's actually going to reject. We've got the shorter term downtrend here. So uptrend here. I'm watching to see how it handles this retest of this trend here, because there is an inverse head and shoulder setup here, and I'm watching that closely. Also watching the very much larger time frame inverse head and shoulders on Tesla. Like I said, I've been in Tesla for like 3 years now, and I've grown my shareholding, so long term I do want to see this thing rocket, but I'm also being realistic and don't lean into the overly hype-ish, bullish mindset on it until I see a shift otherwise. So if I actually go and look at the flows, and I haven't looked at this yet, so I apologize if this actually ends up not being really transparent. It's a bit confusing, but if I look at the well flows real quick, click over so I can actually see it on both screens. So I've actually got a screener set up out here to where I use it to check in on Tesla. I might tweak it to make it a little bit more wide if I want to, if I'm wanting to see a bit more. But what I typically am looking for when I'm selling my covered calls on Tesla is a situation where all of a sudden the whales or the larger funds start closing out their call positions. Not buying calls, but you'll notice on a lot of the big pumps and run-ups that they'll sell calls. That's something we saw time and time again heading into earnings. A lot of times they benefit from IV crush. A lot of them actually went in the money this go round, but surprisingly, I don't think what a lot of people realize is a lot of the calls still expired out of the money because they were sold 2 or 3 weeks before, and Tesla actually only retraced back to that same range. So while it did have a huge 20% plus move, there was still a huge wreckage to a lot of the call option premiums. So even the calls that I sold before earnings are still up like 20% from a covered call standpoint. So the premiums turn in the seller's favor. That's why you want to be careful with Tesla. The same thing's been going on over and over again for Tesla for the last 3 or 4 years. So that's why I shifted my approach and strategy to it, and it seems to work really well for selling covered calls. And I get it. Not everyone has 100 shares of Tesla, and that's fine. There's other strategies you can use in the meantime as well. And then once you do have 100 shares, if you're holding them long term, same thing with NVDA. You can use covered calls or shorter term cash secured puts on the hard dips and then buy to close those. Or you can just actually do single leg puts that you can buy and hedge against your long term shareholding. So all things to consider. We can talk through that in more detail in another video, but what I want to look at here, especially if I shift this over and I'm looking purely at the calls, and you can see I've got this filter set up for larger size, and mainly I'm looking for premiums that are over 100K. So you can see here there's quite a few calls that were actually sold on 11/15 as well, or 11/15 expiration, which is 2 weeks out. So the thing about these contracts that are shorter term like this, notice how these are actually bearish for the stock. So this is somebody actually selling these premiums is what they're doing, and they're hedging against their position. More than likely, these are going to either expire worthless, or the other flip side and the benefit as an option seller on Tesla or other things like this is that within the 45-day mark, especially 30 days or shorter to expiration, the theta decay ramps up significantly, so it's against the buyer and it's beneficial for you as an option seller. So that's why I sold the December covered calls on Tesla, was because I knew that the theta ramp was going to kick in heavily regardless of whether there was IV crush from earnings or not, which there ended up not being so much IV crush immediately because of the huge move being bigger than the implied move for Tesla with earnings. So I didn't get that initial IV crush, but I stayed chill in my position because I knew that the overall the range, and we'll flip back over that real quick so that it all makes sense for people. I saw a couple of more people joined across the same range, right? So like that rejection happened there, and it had I seen up here at the top, just to kind of clarify and provide a little bit more of an explanation so that it makes sense. Had I seen up here once we broke out to the upside of this range, those whales closing their call positions and the open interest dropping because they bought to close those positions, I would have had to evaluate whether or not I closed out or waited on selling covered calls and rode it for more upside movement. But that didn't happen. Rather, I actually saw more significant selling of covered calls or call options or call spreads that were bearish in nature on Tesla the day following the earnings. So again, there's lots of different ways you can trade. You can be bullish on a stock like I am with Tesla, but still be trading puts and trading to the downside. So the puts we trade this morning on Tesla are a really good example of that because those things ripped. I don't remember what they ripped. I'm kind of curious now. I need to go back and look. What is it? So Tesla 11.1, yeah, 164%. See, you can be bullish and still trade both ways, as you should. So if I jump back over here to the chart, Tesla, things I'm going to be watching for next week. I know we have the election, and that statement is going to basically apply to any of these stock charts that I look at right now. But I will be watching to see if it can retake the 250 level and hold that on the daily and weekly charts. If not, if we see more downside continuation after the consolidation, then I'm going to be looking to ride some puts probably. Deej, you were asking me about entering some swing puts on Tesla, and I told you I was going to personally wait. I still have a couple of runners from when we entered on previously, but if we see confirmation of actual rejection here, especially if we see more bear flags starting to form on it, then I'll consider actually phasing into some swing puts for probably March 2025 on Tesla. For one, based off the trade setup itself, but also that serves as an additional hedge for me in my positions. Hey, Deej is actually listening because he got the shout out response. Nice. Cool. Yeah, and if y'all are listening or if you find this valuable, click the like button so I know people are actually getting value out of this, whether you're watching it live or if you're watching the recording. Otherwise, it kind of feels like there's not a point in doing these videos to talk through the technicals of different stocks. Real quick, because people keep on asking about this one, SMCI. We're going to look at this because if you've been in any of the Discords I'm in, you know that I've been watching this and I've been trying to warn people about this setup because it's very clear. So SMCI has got fraud allegations. They've had it for months. That combined with they still haven't filed their annual report, and I don't get why people keep ignoring that. But at any rate, the setup that we have had repeatedly on SMCI has been breakdown, form bear flag, consolidate, breakdown. Right? Same thing over and over again. And if you've listened to any of these videos, you've seen me show this chart and talk through this, and we didn't trade puts on it because we're dumb. Not really. The risk to reward for me wasn't worth it personally. Deej has been over here jumping into SMCI puts basically weekly, and unfortunately was not in SMCI puts whenever it tanked 30% the other night. So right now you've got yet another bear flag that's formed here on the chart, right? And I shared this the other day, but the new bear flag formed here, that's the pole. This is your flag. The measured move for this breakdown was right here, and look, it's heading towards the measured move. So right now, the main thing that I've been talking about with SMCI, and this isn't one of those like talked about back here and keep warning people it's going to happen, eventually it happens. It was more so of a progressive, y'all need to keep being careful. Don't try to trade long-term calls on something just because it's beat down, because the risk is really there of this move that we've been describing, right? So there was a gap lingering on SMCI, and this was pre-split way back when the prices were whatever they were, like $1,300 or $1,200, right? Or was it $1,400? I forget what their split was. What was their split? Yeah, it was a 10-to-1. So there was a gap right here from that first initial big pump up that it rode the AI train with NVDA and several others, and the measured move for this bear flag actually ended up being right around that gap fill. So I wish I would have actually swung some longer term puts on this thing just because all the uncertainty and risk was there. Plus there was a lot of bearish options flow going on in the well flows, but it ended up breaking down from that bear flag and going and filling this gap at 33.40, which I know a lot of people that bought, unfortunately, way up here at like $100 plus, because people on Facebook kept on telling them buy the dip, buy the dip. That doesn't work, and you can't just take that at face value. You need to understand what it is you're investing in and what's going on with the company. So here we are again. If I'm being real, there's a very real possibility that SMCI ends up getting delisted based off the fraud allegations and just all the other stuff we see going on with them. So I'm not touching the thing. It's not worth it to me. I do want to talk about the setup right here because it was something we were watching the other night before that breakdown, just so people don't think I'm like a perma bear or something. But there was actually inverse head and shoulder set up here. You can see the shoulder here, the head here, and the other shoulder here. And I'd marked the measured move of that, which actually was very close to the $63 resistance range. So I deleted it since then because clearly we invalidated that and broke to the downside, but just want to call that out because one thing you'll notice when you're looking at my charts is I have upside moves and downside moves marked typically, because we can see movement either way. NVDA is replacing Intel in the Dow Jones Industrial Average. Ooh, that's a cool news update. Cool. So yeah, on that note, let's look at NVIDIA real quick, because we'll look at NVIDIA, AMD, we'll kind of talk through some of the semiconductors first. Let me show y'all this because I need to delete it so that it's not confusing as ever, but we'll look at it first so that people can understand what the chaos of all these things are. So you can see here, oh look, NVIDIA got this nice big pump in after hours, yay! I need to sell covered calls against it again, let it rip. So again, trading multiple time horizons, right? So earlier today, we actually traded puts as a quick scalp day trade off of NVIDIA. And we entered them with the actual break of support right in this range here. And those things actually rocketed. So we saw the confirmation of the break. there, and then they dropped. I think I trimmed mine way too early. I can't recall what I actually exited at, but those 135 puts it 55% on that initial break. I'm going to go ahead and delete that since we talked about it. I'm going to delete a lot of these minor support and resistance levels, and just to kind of explain the legend a bit more, you can see it in the description, but this kind of shows you how you can have levels that are marked as minor resistance that maybe you're using for shorter term day trading, and you can also have levels of more significant support and resistance that you're trading longer time frames, larger time horizons on. So what I traded on this, like they ended up going 130% there. I think that we trimmed the runner, I can't recall. And then we also had the additional price targets in case it broke more to the downside, but ultimately it caught that support that we had marked, and that was a good place to exit any runners. So deleting these since that trade is over with, and I was watching that downtrend as well. Yeah, I'm going to delete all these minor ones before we zoom out, just because it's going to be messy and confusing if we're trying to look at it with all the shorter term trades. So like a lot of these dotted yellows, these are minor levels of support and resistance, and I can do a separate video again talking through how to go about tagging those. Oh no, don't do that. Oh, that one's locked. Wow, my bad. There we go. Why it's not working. So yeah, no, it's cool. In after hours, it's got that nice little pump, which actually aligns with something I mentioned this morning over in the lounge, because I saw the NVDA was actually catching a bounce, at least in pre-market or after hours yesterday, at this support level, as well as this uptrend, right? So it actually looks like it caught a little bit of a bounce. We'll see if that holds into next week. Ultimately, NVIDIA still has a bullish setup going on here as long as it can hold the range. I think that a lot of the sentiment this past week with some of the earnings, even though you saw, and this is actually a good topic to talk through because we had big tech earnings and people act like tech earnings are great, so therefore everything's going to go moonbound. You saw multiple examples this week of tech tickers that are significant beat on earnings on both sides, and yet they still tanked. So even ones that had decent guidance going forward still tanked. That is why it is very dangerous to try to trade earnings directly, and why you typically see me patiently wait out rather than trying to gamble and trade options on some of these larger tickers that are heading into earnings. I know that some people will buy calls and hope that things pump and the IV goes up in their favor all the way into earnings. It works sometimes and other times it doesn't, because if a stock actually trades flat or range bound within that time frame, you're stuck in a position that you can't exit for gains unless IV turns significantly in your favor, or you actually get stuck in that position all the way up into earnings, and then you have to make a decision on whether or not you want to sell for a loss before holding overnight with earnings. And that's a crappy situation to be in. Rather, I've learned over the years to just be patient. There's plenty of opportunity to trade a lot of these setups following earnings. Let the earnings happen, trade the reaction. That's a smart and safe way to trade a lot of these setups. It's one thing if you're in a ticker long term with shareholdings, and even with certain call options, although y'all have heard me warn on other videos to be careful with leap calls on a lot of these tickers right now, just because if the Fed keeps cutting interest rates, it's going to end up hurting a lot of the premiums because the row is going to actually go against the options. So just something to keep in mind. Overall, the setup's still bullish here. There's a bit of an inverse head and shoulders playing out. We can still see upside movement. I'd like to see it hold this uptrend and continue up. This is a call and put DGens expire worthless on until, yeah, Morehead. See, that's why. I mean, it's one thing to trade a spread like that, especially as a seller. I typically, like for me, especially with a lot of the trading I do, because I know that other people are going to follow a lot of those alerts, I tend to be more cautious nowadays, and you can argue that I miss out on some of the gains on some of the trades because I don't enter as early as like others do, which I'm okay with arguing that if you want, because you can look at the data and see that overall the consistency of gains with the trading style that I use for that is much better than 50% of them you take huge hits on with earnings, and then the other 50% you take minimal gains because IV offsets. So Really, it's an outlier situation like last week where some of the calls for Tesla ripped significantly because it had a 20% move, which was more than, actually it was more than 20%, but it had a move that was more significant than the implied move with the options. But I can tell you, after trading consistently on a daily basis for 3+ years now, I guess 4+ years now, that's definitely not common. That's more of an outlier situation than anything, and I don't personally like to gamble my capital on hoping that an outlier plays out like that. So I'll be watching NVIDIA here. I need to sell covered calls again on some of my NVIDIA shares because I have some that still aren't tied up at the moment. As of close today, those NVIDIA covered calls that we sold back in, when did we sell those? Let me look real quick. We sold them September. So here's the interesting thing, and it's probably a good example to talk through. So like even selling those covered calls on September 24th, which was here on this pop, selling those NVIDIA covered calls on, what were they? Let me make sure I get the right one to tell you. So I think it was the 140. Let me click it, make sure. Yeah, the 140 December calls and the 130 November covered calls, they're both up right now in the position that we sold, even though the stock is higher than when we sold it. And that is why you need to understand options Greeks, both as a buyer and seller. And that's kind of the power that comes out of being on both sides, because you learn a bit more about how the option movement works, especially for options that expire within 0 days to 45 days, where the data starts to ramp up. That's where the value that comes out of trading both sides. So I know a lot of options traders try to get in and buy options and sell options because it's very appealing because you see the significant gains. That being said, it's, from my standpoint, especially if you have the capital to do it, using cash secured puts and selling premiums and covered calls against shares is a much better way to get familiar with how options work. And it works very well for actually putting you in a position to where you can actually gain the premiums. I guess a flip side question or approach you could use for that is think back to the options that you've got wrecked on the most over the last 6 months. Now go sell those premiums. That's a great way that you can look at it and kind of test that out a little bit. If you're consistently losing money on certain types of call options, for instance, on stocks that you hold shares of, maybe you should be selling covered calls that are similar to that format like the rest of retail is buying. Shift your mindset on it and you'll notice that you'll start to make more consistent gains, but also you'll get a better understanding of how things are going to move. Because at the end of the day, it's not manipulation with a lot of the movement that you see. It's just the nature of how the derivatives in the market work in general. So rather than complain about it or throw a fit, instead you can actually learn how the things are working, trade accordingly, whether you have large amounts of capital or small amounts of capital. There's still stocks out there that you can trade with smaller amounts of capital using covered calls and cash secured puts. No, you're not going to have $1,000 gains off a $100 account, but you can learn better and develop and scale and grow that account over time. And in the end, in a year or two, you'll notice that your account scales to the size that you can buy and sell much larger premiums. So sorry for that kind of derail there a little bit, but that's actually good stuff. And if you find that valuable, let me know. We can talk through those types of things a bit more in separate videos, but I can't put videos and things like that together if I don't hear the feedback on things that you want to specifically learn more about. So let me see here. Let me pull up the list and kind of shift over a bit and just actually crank some technicals for people. Because we had lots of earnings this week. We had lots of movement on stocks and ETFs, but I'm going to look over Apple real quick following their earnings, right? So they had earnings. Like I didn't even click for me the fact that they actually had a miss from a surprise estimate standpoint. They beat like from actual general estimate standpoint, but it's actually not surprising, I guess. One thing with Apple earnings is almost always you'll see that there's a revision of what the targets are 3 to 4 weeks out from earnings, and then they just happen to beat coming in on that. So that's something that's happened time and time again. Apple, we were talking about a couple of weeks ago that heading into earnings, This is why you didn't see me. Again, like we talked about a few minutes ago, trading Apple calls and puts, aside from like those lotto $20 Apple calls that we traded the day or two beforehand just as a pure gamble. But no swings for me until we saw how this played out with earnings. The risk to reward is just not worth it. And this is a good example of why. Because, yeah, sure, you could have been in puts here and potentially taking gains based off that, but why risk it? Why not just wait until after the earnings play out and from there trade accordingly to the reaction? So Apple, I forget the positions we traded on Apple this week. We traded a couple following earnings, but ultimately, was that today? No, it was yesterday. We traded Apple calls. That was today. Somebody confirm for me that we traded those Apple calls. I think that was this morning, right? Yeah, here, let me look at the chart. Yeah, we scalped Apple calls this morning off the support bounce. So we got them off that bounce right there, and it was 149% gain. So trade the reaction. Yeah, Deej and Moorhead are typing. Watch a video on wheel strategy. Dude, I'd love to put a video together for you for the wheel strategy. There's actually, if you look over in the learning section, there's a kind of brief write-up on what the wheel strategy is and how to use it. I need to put together a video and a list of some good stocks to use for the wheel strategy. I've got one over here. I just need to share that with others. At any rate, kind of to dive into the technicals again, we trade the reaction off the support and resistance levels. Same thing you can do with any earnings, any news event, any Fed event. Rather than impatiently jump in and gamble and hope that it plays out in your favor, wait and play the reaction. It's a much safer way to trade. It's a cleaner way to trade. You'll notice you have better, more consistent gains. But ultimately, here's where Apple's at, right? Apple has broken its uptrend. It's testing a support range here. There's a demand zone here. So this is potentially going to be good if it can catch a bounce in this range again. You can see here that, for one, if it can hold that level, which, sorry, there's lots of lines here, but that's 220.38 is the support level it bounced at today. One concerning thing here is it did fill this overnight gap. So and this morning, that's when we exited those 149% gains, by the way, was when it filled that gap. And sorry, I don't have a line there, but I guess I should put that just for consistency's sake so I don't forget to come back and put it later. So yeah, you can see it bounced and filled that gap and then rejected. But right here on Apple, I'd be watching to see, can it hold the support range and get upside movement, or is it going to continue to move to the downside and potentially go test the 216 support? Specific tickers be helpful. Yeah, I got you, Analyzer. I'll give you my list. Let me put that on my note thing here. Cool. So yeah, Apple watching these levels into next week, especially with the election, all the uncertainty and stuff. I'm gonna go ahead and delete these minor support and resistance levels for the moment, just to make things a bit cleaner. Again, on a separate video, I can talk through what signifies making it major versus minor support and resistance. But if you look at the weekly, that's not so bueno. That's a very big red candle breaking that trend. So I don't know. I want to see if the support range holds. If we see follow-through confirmation of downside movement, especially if we see volume pick up with selling, that's going to be a good put entry on Apple. Things aren't going so hot for them anyways with their iPhone sales and other things, so outlook's not great. So I will be watching Apple for a potential put trade. Let me look real quick over here though. So like Amazon, I can't remember if I did leave the movements for some of these trade setups. So Amazon had earnings this week, right? We gapped up big. We nailed perfectly the resistance level from last time. Damn, that was actually when it tagged 200. I should have entered puts maybe for a very quick scalp, but this was a good example of why trading shorter term, higher risk options sometimes makes more sense than trading longer term swing options. Because if you were to hop in 200 or puts this morning when this tagged 200, I'd have to look and see to confirm, but I could probably guarantee you that if you look at options that are like 3, 4, 5, 6 months out, that even with that rejection and pullback there, that the premiums hardly moved and potentially even got IV crushed. So it's sometimes, even though it's more risky to trade shorter term options, it comes down to what the time horizon is for the trade that you're looking to make is. If you're trading based off of a short term rejection, you want to make sure that you're trading a strike and an expiration that has supporting Greeks to benefit from that. So again, like I know we traded like several 0 day to expiration options today on some stocks. Normally I haven't been as heavy on lotto trades that expire day of entry like that, just because a lot of people don't day trade. But again, that's why I'm going to recommend everyone has a cash account for that style of trading. If you don't have 25K, just use a cash account, let your funds settle overnight, build patience, you'll be okay. But yeah, it wouldn't make sense for me yet. If I see a confirmed follow through here on that rejection, then I might trade similar to what we did on Google, which those puts went nuts this week. What'd they end up hitting? I've got it right over here. I want to look because that one's fun. I'll show y'all what I'm talking about. Those hit 699% gain. So again, this is another excellent example of why trading the follow through move after earnings can be a better approach than trying to trade into earnings. So if you were to go look at call options for Google, even with this massive gap up that happened with earnings on Tuesday into Wednesday, I bet you that the gains that you could get from those was pretty solid, right? But with IV being in play, now I'm kind of curious because I don't want to give y'all just like false comments without actually giving it with a live example. So if I look at like the November 15th calls, or say the 185 strike, let's go with something slightly out of the money just so that we're actually looking apples to apples. Wow, those got hammered today. Sorry. So those closed, what was that, the 29th, right? Yeah. So those actually closed and gapped up. They closed at, let me see. They closed at 215 and they popped up the following day for a brief moment to 360. So just so that we're on the same page and that y'all follow what I'm talking about here. People could have traded calls on Google in that moment and taken the risk. And even with that massive green candle that happened with earnings with Google, those options only offered 67% gains. Okay? So risk to reward. You're starting to, I think, understand hopefully why I'm recommending not trading into earnings. It's just not worth it rather than trading after earnings. So trading that huge pop off of earnings, right? Those people made 67% gains off an option that they had to risk $200 for. Trading after earnings on puts with a rejection, we traded some shorter term 175 puts that were higher risk, yes, but it only cost $76 to buy those contracts, and they ripped 699%. I'm not saying that happens every time, but I'm saying it's safer to trade the movement after the actual earnings in this type of situation, because typically you've got IV crush in your favor at that point because the option premiums have tanked with earnings, and that's an excellent point to buy. Same thing if you get a solid dip with earnings. If you see that a stock catches a significant support level and is showing confirmation of a actual bounce at that level, it's not a bad idea to enter calls as long as you understand what the Greeks are to support the move. Because if you were to enter longer term Google puts here, you may not have reaped a benefit like we did on the shorter term put options that we traded. Now, I'll be transparent. I bailed early on over here yesterday when we tagged the first support level. So I didn't get my 699% gains. I know a couple of people went degen and left runners on it. So awesome for them. Those 175s, once they went in the money, they just started actually going down. Is how that works. So that was an excellent trade setup and kind of a good example of why it's better typically to trade after earnings rather than gambling with earnings, and hoping that plays out in your favor. Nothing wrong with, I guess, a single lotto here and there with earnings, but for me, I just, especially on a small account and stuff, like the small account challenge account, where you're trying to learn and scale and grow it, it typically is going to be better to just sit out on earnings regardless of ticker and then trade the reaction. Because if you have a small account that's like $500 or something and you gamble a fifth of your account on that kind of option, and it doesn't go your way, you've just lost 20% of your account. And it may take you 5 more trades to rebuild that 20%. So just be patient, trade the things the right way. Sorry, I keep saying we're going to go into the technicals and keep going into more technicals, but there's just so many good learning and teaching opportunities that keep popping up from all these stocks this week. So let's look at AMD because, yeah, I've got some longer term swing calls that I should have trimmed earlier on before earnings, but I left them in play just because I was like, I've already covered my cost basis. Phasing into it, we'll see what happens. But yeah, AMD, you can see here, most definitely did reject back into, most definitely rejected back into its downtrend here. And I'm deleting these minor support and resistance levels to make things not so muddy. But it also has now formed a gap to the upside here that's not been filled. So we broke this uptrend shorter term following earnings. Also, we're back into this downtrend. I'm not giving up hope on AMD just yet because I want to see if it can hold this support range and especially this 135 range. So I'm very, very likely into some 2025 calls, like some cheap out of the money ones, just because right here I can justify the risk to reward for a very cheap option. I haven't added to that position yet, and I'm not going to until I see reversal. If this thing confirms further downside break here, I'm trading puts to the next support level and then I'll exit them. But as of right now, AMD is kind of in this zone to where it can go either way. You can see we actually had this movement here as a potential move if it didn't break out to the upside with earnings. So I'm going to delete this upside move there because it's gone now. And delete that, get out of the way. But yeah, that's the chip sentiment. I warned people of this like 4 or 5 weeks ago, and then we talked about it again last week. But ultimately, look at this. This is a hellacious head and shoulders setup on SMH, which is one of the key ETFs that you use for semiconductor stocks like NVDA and AMD and several others. While there's some bullish momentum that was trying to happen here, that head and shoulders never left. And now you've got another potential head and shoulders that's forming over here within that setup. I don't know if that was as obvious for other people, so sorry if I kind of just dove right into that without actually clarifying it. You look at the charts enough and you start to notice the stuff without actually having to draw it. But here, you can either draw it here. I don't like the way that looks, and again, head and shoulders is just a high followed by, sorry, this is just not playing nice with me at the moment. My mouse is fighting me again, Deej. Look, no. Let's draw it from scratch. Sorry. Deej has got the ongoing running joke right now. You already got your 210 call picked out? I like it, Analyzer. Rocket, dude. What's the expiration on that? It's not in the picture. I just see it says 210 call. When is that one? Is that one like January, February, March? I mean, honestly, me personally, AMD, if you're going calls at this point, maybe target March. I'm guessing that one's probably January-ish based off of being that cheap. But yeah, there's a head and shoulders here. Sorry, my mouse is not playing nice with these other levels in the way, but I'm going to draw this thing. Determined. I'm going to draw it based off the daily, and then we'll come back to it on the smaller time frames and clean it up. So you got a head and shoulders here as well. You can put it here if you wanted and call it breaking down. I'm not going to do that though. I'm going to actually do it based off of the more conservative approach that we've got going on here. And we're going to draw it like this. Man, this mouse is just not playing nice with this one pattern, which makes no sense to me. We're going to make it work, guys. Sorry. Alright, like I said, we can jump down now to the smaller time frame, clean this thing up a little bit. But ultimately, what we would need to see for invalidation to happen on the head and shoulders, which you can see how the colors didn't shift. It's because it's on a different time frame and it's not connected to proper dots. But I'm gonna make it fixed before I post this thing over in one of the lounge channels or something, so y'all have it. But it is just not going to work for whatever reason. January 17th. Yeah, just Analyzer, what is that one? That one's Wait. Oh, dude, I'm over here looking at the chart. I was like, why is your AMD 210 calls so cheap whenever it's like currently at 245? I forgot that we switched over to SMH. At any rate, guys. So, see, we got this larger term going on here, month pick. If it was me, if I was looking for AMD calls, I'd be looking at March, maybe even June at this point, just to be safe. I mean, if you want a lotto type high risk trade, you can go January, February, March. For those more out of the money ones, like I'm still in some of the 300 ones. Just I have no expectation that those go in the money. By the way, it's just more so that they don't have to go in the money based off the Greeks. But regardless, watching this on SMH, AMD, NVDA, several others, because chip stocks are not looking so hot. I'm gonna look at this one because we've talked about in the past why this one is kind of touchy to talk about and look at, but I also warned y'all about this crap right here in the lounge a few weeks ago when y'all were talking. Like, Chris, dude, I tried to strategically talk about this one, right? That, like, be careful when we were in this zone because it was very likely going to get more downside drop. So take that for what you want to take it for and interpret it accordingly, right? So even though their earnings actually were good, their forward guidance wasn't so hot. And they're in Kirkland, Seattle, right? So it's a beautiful place. I was there a few weeks back. Yeah, big gap down, break of trend. We're testing the support zone at this point. So yeah, I want to see Monolithic Power get some bounce action going on for multiple reasons, but that was a hellacious sell-off, which wasn't shocking. But yeah, big semiconductor company, or support of semiconductor company, I should say. Just another thing, but yeah, jumping back to NVIDIA. Again, they've got earnings coming up, but that could tank really hard, so I need to sell covered calls against it. Just because I know we are running out of time, let me do this. Let's look at the tickers that were requested most recently over in the chat as well. Deej, I'm going to work my way up. So LMT is right there. So, and Palantir. Someone do not let me forget to look at Palantir and explain the why of why I'm going to stay in my long positions and consider selling covered calls if we break. So Lockheed Martin looks like they got a hard sell-off following their earnings. I need to chart it on TradingView so that I can share it with y'all here because I think I have it charted on Webull at the moment. It looks like it's actually heading into this demand zone, so it might catch a bounce there. I'd watch it and see, but I don't want to. You said LMT, and it reminded me, so I'm going to hit Palantir, and then I'll hit those others that y'all were asking for. The reason why LMT reminded me is Palantir is because y'all see the increasing escalations that are going on right now, yet again, in the Middle East, especially depending on the election outcome. That might mean more intense things in the Middle East. Keep in mind that Palantir is not just a tech company. Palantir has a strong and heavy presence in the cyber terrorism area as well as the cybersecurity and intelligence sector. So it actually serves as a wartime stock. And if there was new government contracts that happen with Palantir in the coming months based off of data and information that's available, it's probably going to continue upside movement. So, like, I agree with Chris that the daily is starting to show hesitation here, right? Also on the weekly, it has this pullback, but that's not, like, you've got your bearish engulfing here. But keep in mind that that bearish engulfing was followed by a bounce at that support level. So before I call full-blown trend reversal here, I'm waiting to see if this continuation continues. And then, like I was talking about a few weeks ago, if we see a break below 41.55, I'll sell covered calls to hedge my share positions. If I see a bounce here, I'm entering more long calls on Palantir. The measured move for the current bear or bull flag breakout, which was that flag that we're absolutely still in at this point, is up here, right? Keep in mind, this uptrend is still intact at the moment, so we have not broke trend. This support level is intact at the moment, so support is still in play. We're also at the same support of the previous bull flag that we have been playing out, and we have retested the support again. So at the moment, Palantir is not full-blown bearish based off of the last 2 days. I want to show you something real quick. We're going to look at it on Palantir. So same thing, right? Remember how everybody, especially back here in this 30s range, was like, oh yeah, 32.65 price target met. All right, we're working down, nothing. Bam, gap up and next move. So that's until I see upside, or I'm sorry, actually here, I told you I would do this, so I'm gonna open it up really quick because I do have it over here on the other screen. Even if I shifted it on that other one, but the well flow, I want to make sure and show it because we talked about it in the lounge. So well flow for Palantir, there's still a crap load of bullish call movement going on. Let me change the size. Remove this. I'm gonna change the size to at least 100. I'm not in the right filter, I don't think. Am I in general? Oh, that's why. I'll fix it. I want to show y'all something. Same thing as what I talked about on Tesla, where I'm selling covered calls, right? You've got some bearish flow here, but a lot of that is actually part of a multi-leg strategy that's actually heading into earnings. So that one right there, notice that this is 2027. This thing is multiple years out, and it's actually, the volume was higher than the actual chain. When you see this far out, that's not somebody selling calls based off of expectation of a hard dump. That's typically arbitrage, is what that kind of thing is, that far out and that far out of the money. So what I'm more concerned about, and what I would be more looking at this point for indication of whether or not people at larger funds are expecting a downside move, is, are they closing out those call positions that they've been opening, and are they selling an open, I'm sorry, let's rephrase that, are they selling to open call positions as we tag those levels, like you would expect and like we saw on Tesla? So Palantir, we're not seeing that. We're actually still seeing a lot of bullish flow movement here for $50 calls in the next, week, for one, because they have earnings. So again, if you want to do the smart thing, trade enter after earnings is the smart thing to do here. Ultimately, though, we're not just seeing flat out bearish movement going on in the options flow for Palantir. So if I start to see call positions being sold and cash secured put positions being bought to close, I'll reevaluate and reconsider on Palantir. But at the moment, I'm not seeing a strong push to the one side or the other in the flows. So from that perspective, combined with those other key support levels I showed a moment ago, while we could head back, and I know like Chris mentioned, like I think the $30 price range, because Wall Street is expecting that, which I'm not sure how that was determined, but like I will agree from the weekly standpoint, like the support zone would be back in that 31 range where the gap fill is. That being said, we haven't lost the support up here yet, and rather we've actually, if you look at the monthly, it tells a very different story. The monthly says we want more, we want more. But if you're looking long-term growth on Palantir, heading into earnings, I think you see some sell-off happening right now into earnings because of uncertainty combined with the election. But right now, we've got a higher push, and our candles are growing stronger with strong buying volume here on the monthly. So it's still holding this. If we lose the 41.55 level, I'll start to reevaluate whether or not I need to actually sell covered calls against my position. But for the time being, I'm looking for a pullback opportunity and a hold of support, which this may be what we get next week with earnings, to enter more swing calls on it. Because right now, that's still bull flag. Until that thing is invalidated, I'm trading the actual movement and the confirmations that come into play. So if I see a bounce here, a push up back above that support, and we have buying volume come flowing in, especially following earnings, yeah, that's a great continuation entry for more calls on Palantir. So again, like a lot of stocks in the tech sector kind of get wrecked whenever you've got uncertainty with the Middle East. Palantir is one of those that benefits from it a good bit. Real quick, we're going to talk through crypto, MicroStrategy, and coin, and then we'll wrap it up. But I know people are freaking out, and y'all know what my holdings are on crypto, so you know we can say I'm biased if you want, but it's not really biased when I'm looking at this, because if you look at this chart, this is a massive bull flag still, right? We broke out of the bull flag, and we are retesting the bull flag breakout level right now. We're still in an uptrend. We're still in breakout at this point. Until we lose the support range, especially drop back down below 68k, this thing's still breaking out. I think you're seeing some sell-off here that's happening as a result of the election being next week and uncertainty there. Also, that's very healthy movement for us to have. So as of right now, same as always, I'm not getting rid of any of my cold storage holdings of crypto. I'm riding it out. I'll trade leverage crypto futures short and long, both directions accordingly. But as of right now, a lot of crypto setup, this is great. I'm expecting a lot of upside movement and growth for crypto within the next 6 months, especially heading into 2025, depending on how the election plays out. Crypto's going to get a lot of bullish movement. Especially not just from this standpoint, but if you're familiar with blockchain technology and the halving cycles, that's where a lot of the movement from Bitcoin and others is going to come from as well. So, let's see. Bitcoin, again, still bullish watching this. I'm not going to kind of talk through how to short-term trade Bitcoin, because really most of y'all are trading on retail trading platforms like Robinhood, Coinbase, others, that the fees are so high that it really doesn't justify trying to scalp or day trade or trade crypto directly. I know some of y'all have asked again about crypto ETFs. I don't like them. I don't touch them. It's not worth it from a risk to reward standpoint for me, for a lot of different reasons. Plus, I've seen my share of the last 3 years of ETFs for Bitcoin and other crypto that even though Bitcoin soared to new highs this year, those ETFs never hit their previous high. So just take it for what you want. I've been in crypto since 2016, 2017. Some of y'all know that I've got significant amount at stake if crypto was to fail, and I'm not worried at all right now. So throwing that out there, if we look at ETH, same thing as what I can't type. Same thing as what I've been mentioning previously on this one. I'm not loving the setup, and I kind of think that ever since the ETH shifted over to down to about 11.8 or 11.15, Analyzer, that's I would wait and see what levels MicroStrategy and Coin. Now I'll look at both the charts here in a second and show you. I think that it's going to depend on, for one, the election outcome, because one way or another, it's either going to kind of stay status quo or it's going to rocket and be kind of a positive catalyst. Also, one thing I've mentioned on videos before when it comes to crypto that you want to watch out for is people taking paper losses to offset capital gains. And I do it. I'm no whale by any means, but I've got certain wallets that I use to take paper losses on crypto heading into the end of the year because it offsets capital gains for stocks and other securities. So there's no wash sell rule with crypto. Therefore, you see certain wallets and certain people selling off larger chunks of crypto just to immediately buy it right back. So I guess I've learned, especially because crypto is really transparent, whether people want to realize that or not. You can see when large wallets sell, the transactions are public on the blockchain. So if a whale moves, you can see it. As of right now, though, that is a bear flag on Ethereum. That being said, Ethereum's going to rip with everything else to some extent if Bitcoin and others rocket. For me personally, Ethereum, I've got quite a bit. Y'all have seen it. A lot of that came from mining rewards and other things over the years. But Ethereum, Bitcoin, if I was going to go into a crypto at this point, I need to still put together the video that y'all requested, talking through 5 to 10 crypto projects for 2015 that would be ideal. But if there was a crypto that I would say right now is probably my top go-to, and I was talking to my brother-in-law about this one earlier today, it's Solana. So Solana has got this big, sexy bull flag breakout setup going on, inverse head and shoulder setup going on. This little pullback right here is great. This is one that, I got better entry than most people because I entered back in January 2023. When I saw the dip, I was like, that's my chance. I had to put my Ethereum mining reward somewhere. So I parked it in Solana and have like 1100% gains at the moment. But that being said, this is one of those different crypto projects. It's a hybrid blockchain technology for those that are familiar with it. And if you're not familiar with blockchain technology, like, don't be scared of crypto, seek to understand it. And I think that you'll find that a lot of people that are hesitant on it will actually enjoy and see the value that comes out of a lot of the crypto projects. But also, if you're going to invest in something, you need to understand what it is. So I think that that's an important thing to take into account. But similar to what we've got over on Bitcoin, Solana's got this awesome bullish setup going on. So it's got a cup and handle, but it's got this huge bull flag here. So especially as people start trickling in towards the end of the year, you're going to see a push up here probably. We haven't hit alt season yet, and I could talk in a video on itself related to alt season and Bitcoin dominance and everything else. But when alt season happens, Solana's going to catch much love over the Ethereum and Bitcoin, as are a lot of other coins like Doge, Shiba Inu, and quite a few others, right? A lot of altcoin projects are looking great for next year that are actually like true altcoins and not these mainstream coins. But even Doge right here can have some upside momentum and push out now that it's broke out. So I'm watching that. I'm going through these kind of fast just for the sake of time, and then y'all can watch the video to see the levels, or I drop the charts over in the ticker specific channels. But you can see we kind of got the same setup going on both of these. Real quick though, we're going to touch on some of these crypto stocks like super fast. So coin, this is a cup and handle, this is a handle. If I was to guess, we are pulling back. We tapped this support line. I'm sorry, let me zoom in some because that weekly's kind of messy with all those sub levels. Let me remove these minors. But if I was to guess on this cup and handle, we pull back and we just happen to tag the confluence level here where there is this uptrend line and the actual handle itself, as well as support ranges. And I bet we tap that level, and it just happens to happen around the same time that Bitcoin and crypto and everything else start to get a solid pump. And I bet this thing just completely and totally rockets to the upside. Very similar to what we saw earlier this year, back in February, where it ripped basically from the current range to, what was that, like 260 plus within 2 weeks. So you're going to see significant volatile movement. Keep in mind that Coinbase is getting its revenue and money from people buying and selling crypto because they're an exchange. Whereas companies like Mara, Riot, BKKT, some of the others that are mining companies are getting their revenue and money from mining crypto. And then you got MicroStrategy, which we're going to touch real quick. That a lot of their value comes from the fact that they bought and held significant Bitcoin holdings over the years. So MicroStrategy, same thing. I'd be looking for the pullback here. It's still in breakout mode. It's still in upside continuation. I'd be curious to see if it holds this uptrend. That's not perfectly drawn, but you get the drift. So I'd be curious to see if it holds that uptrend. It'd be great if it can come test this level right here. If it tests that level right there around that 212 mark, I'm buying long calls, because Bitcoin's going to rocket, and that's a company that's got a whole lot of Bitcoin. So this is a good, like, if you don't want to trade crypto directly, which I can't for the life of me understand why somebody wouldn't at this point. If you're scared of it, just stay out of it altogether. But don't use the ETFs. Even one of the more conservative, old school trading type guys over on the stock option trading groups, he uses MicroStrategy as his exposure to crypto, and that's not a bad approach, just because majority of their money and their value and revenues come from their holdings. So yeah, that being said, this thing is in bull flag breakout at the moment. It's still got plenty of upside movement to come in the months, so I'll be looking for retracement opportunities to enter long calls on it. Same thing on several others right now. People are freaking out because these pullbacks this week. I'm like, dude, have you not paid attention to the last 2 months of upside ripping? Retracement is healthy and good. So you can see here, even with Riot, we tagged that resistance level, and now we've got pullback for consolidation probably. So I'll be looking for a bull flag to get formed here. I'll add to some 2025 Riot long calls, because this is another one that once it blows out of this zone, it blows out of the zone and there's no stopping it. So we're already in some Riot $13 calls, I think, so I'll be adding to those, but they're for next year. They've got plenty of time left. Same thing if I look over here at Mara. Right, similar setup. You've got inverse head and shoulders. I'll delete this just because it invalidated when it hit that line there, but I'd be looking for Mara to tag and test that trend line if it hasn't already. But there you can see it's trying to break the trend. I'd see if that has follow through or if it catches a bounce at one of these support levels. But yeah, Mara, Riot, several others. That's going to be some good ones that I'm going to be swinging into next year. You don't have to trade the most expensive top 10 big tech tickers to make big gains, right? So let's see. Is there any other tickers that were requested on here that I didn't cover? I want to make sure I covered it. We touched on LMT. Coin, yep. I feel like there was one or two tickers I missed. Maybe I didn't. Maybe I covered them all. Yeah. Got those. Alright. In that case, I will go ahead and I'll wrap it. That being said, like I'll probably do another deeper dive video next week on Monday. Or if there's any stocks, charts, tickers you want me to pull over the weekend, just tell me and I'll go pull them, and I can either put them in the lounge, I can put them in ticker specific channels, I can put them on the trading floor over on Bullish Raid, or I can do a quick video instead of doing like one of these longer videos talking through a lot of technical things and training, learning. I can do something that's specific to technical overviews on specific tickers, like short little 1 to 2 minute videos. I think that might be more useful for some of you, but if that's something you're wanting, just tell me, and that way I can make it a point to do those videos separately. Another ask is any topics y'all want to see a specific learning video on, please let me know, share the feedback. I've got covered calls for Tesla and NVDA, which if you're listening now and you weren't at the beginning, I covered those pretty good in there, but I may pull that snippet of the video out of this and put it elsewhere. Oh yeah, sorry, here, let me look the indices real quick because Analyzer asked and I did mean to cover it. And then I'll do a true wrap up. So like, I would be careful here. A lot of the upside movement we've seen this year has been based off of tech movement. And while we had a couple of tech tickers this week that got good upside movement with earnings, QQQ did break both of its uptrends. So I would be careful here. If it loses the support that's currently clinging to life on, it's probably going to go test this longer term uptrend down at like the 460 level. And that's a great opportunity to swing puts if we see the breakdown. You can't rely fully on a Santa rally because while that's a thing, it's also like a 2 to 3 day period typically. So especially being an election year and not knowing how the outcome of the election impacts who pulls money from what markets, I'm going to recommend people be careful with upside movement here because we've ran so hard. We need healthier pullbacks if we're going to move higher on a lot of these things. So same thing with SPY, right? SPY broke. I'm going to go ahead and delete this so I can redraw it later, but this was the measured move to the upside. So SPY broke its uptrend for the shorter term, and it's likely going to move down and test this next support range here. It's got a demand zone, it looks like, in that 562 range. If it can hold that, that's great. If it can't, the sucker's going to plummet a good bit. We'll see how the election plays into all of this, right? I'd be careful with a lot of swing calls at this point. Aside from not all earnings being done, a lot of these tickers are showing signs of a true reversal in a larger time frame. So we'll see if the election gives it upside bullish momentum and pushes this up. Lil Man said NVIDIA is saving the market. Is it though? As of right now, we're catching a little pre-support pop. Not actually I mean, okay. It's NVIDIA is getting this little bounce on with that news that it's replacing Intel and the ETF, but it's you notice there's a little bit of delineation starting to happen now between this aftermarket movement and NVIDIA and that brief movement with QQQ. So I'd like to see NVIDIA hold the range. Like I said, I really want to sell more covered calls on NVIDIA because I didn't sell them all and I was kicking myself. I got sidetracked. So if it can get and open up next week over 140, I'm selling covered calls between 140 and 143. I want to see too how some of the other tickers in the big tech play out next week with earnings, because right now I would feel better if we retake this trend line, because right now even with the aftermarket movement we're down below that trend line. So sorry, been talking too much on this live stream, can't talk anymore. But anyways, if y'all got any tickers y'all want me to do, I was gonna swing puts on QQ 2 weeks out analyzer. Yeah, so be careful about getting too stuck in your mind what you're going to trade based off of what's happening right now and aftermarket and what the current setup is. Wait and see what happens on Monday and Tuesday, and honestly the safest thing you could probably do would be to wait and see how the election plays out, because there's no telling how that's going to impact things. Or just hopefully nothing crazy happens, just because like I don't want that for my kids, and nobody wants to be in a world that's that chaotic and crazy, right? But there's no telling. This is kind of one of those really wacky elections, so we'll see how it plays out next week. But I'll trade lightly early next week, and I'll be looking for things to enter back on the small account again. But yeah, I'll start trading a bit heavier for swing options. Like I might ease into a few, but I'll start swinging heavier swing options once we get past the election next week. So, alright. On that note, I'm going to wrap it up. Go spend time with family. I think we're having another Harry Potter night because we didn't make it through all the videos the other day. So if y'all do need anything, feel free to reach out on any of the Discords, Facebook, Twitter, YouTube, whatever. Be happy to help. Hope everyone has a great and blessed weekend. Get some rest, and we'll trade some more next week. Later.